请继续提问。
China's finance ministry is keeping the proactive fiscal policy in place. Tax cuts will continue in 2018. Value-added tax reform is ongoing. 3 tax brackets will be reduced to 2. This should help manufacturing and transportation businesses. More SMEs will be eligible for tax relief. The entrepreneurial boom will be kept up with a tax incentive for venture capital and angel investors. China's property tax is likely to come before 2020. The finance ministry says they will start with a simpler version, combining some property tax categories that are common in other countries. The ministry will also reduce some of the construction expenses and transaction costs of property. The threshold for personal income tax will be raised. Deputies have proposed to push the cutoff point from 3,500 yuan to 7,000 yuan or even higher. The finance ministry explains they will be based on a person's overall cost of living. What would make a bigger difference to wage earners is tax deductibles for personal health care and kids' education.
We have estimated the effects the implementation of the tax reduction policy will have. The annual tax reduction is expected to exceed 800 billion yuan. At the same time, we need to further the cleaning up of the movement of government funds, administrative fees, and business service charges this year. We are expecting to reduce the burden by more than 300 billion yuan throughout the whole year.
It will be a challenging year for fiscal policymakers. They want to cut taxes, raise spending, and reduce budget deficit. They want to do all of those on the backdrop of a slowing economy. There have to be ways to boost their finances. And that's where the special purpose bonds come into play. Special purpose bonds are issued by local governments to finance infrastructure projects. They're not backed by tax revenues but returns of the projects. The issuance of such special bonds will jump to 1.35 trillion yuan this year, 70% higher than 2017's figure. Xia Cheng, CGTN, Beijing.